was I reopened it on the laptop and I went reclaim host. And then I just left on the iPad. See how it says leave meeting, not end meeting?
Yeah.
That means the meeting's still going, it's still being broadcast.
find it. I'm not doing everything right here. Okay, let's launch into the meeting, and apologies. Are we all here? There seems to be a full table. Okay, declarations of interest. I wouldn't think so. Okay, so going to the non-confidential minutes, confirmation. Moved by Councillor Burdett, second Councillor McLean. All in favour say aye. Aye. Against, carried. Items arising, an action sheet. Councillor Seymour.
Just one query. It relates to page 8 and the long-term plan summary changes. The inner harbour variance of 616k to be externally funded by NZTA. Is that something that is absolutely secure?
It is in the RLTP and they have good confirmation on that amount.
Any other questions? The action sheet items there. Okay, nothing further. There's the work plan, just for your information. Okay, right, if there's no further discussion around those items, we'll work through the things on the agenda from 4 to 9, which leave of absence, acknowledgements, tributes, public input, extraordinary business, notice of motion, adjourned business. No, none of that. Okay, so we'll go on to page 16. Agreement of Gisborne Holdings Limited, statement of intent. You're moving? Okay. A seconder? Yeah, so there's two options. 2A, okay. You've seen that, Councillor Forringer? I'll move it, I'll have some discussion around it. Look, there's just a couple of things in there. One was things that we did discuss, and I noticed in here, when we talked about all the assets that Gisborne Holdings is holding, we thought that, and our discussion the other day agreed that it should be in the annual report, not in the SOI. That was general agreement from all parties. So yeah, we just have to note that. And here it sort of suggests that it should be in the SOI. The other thing was that mentions in here is talks about the governance manual, which is something that we don't have at this stage, but that's where we would like to put in our target of returns for any new commercial investments. I think we agreed with that as well, didn't we? You know, there's nods from GHL down there, and welcome to GHL people. Okay, so right. So anyway, is there any further discussion around that, Robert?
Just a comment here. With the 10% or 10 million guidelines, I think that's good because it gives GHL the ability to make commercial and entrepreneurial moves independently. But bear in mind that these limits also apply to the disposal of assets as well. And I mean, for example, not that this is going to happen, but that would actually perhaps give them the right to sell the Warren Fitness testing station, for example, should they see that would be, you know, useful to them to raise money, for example. But would we as a group be happy with that sort of flexibility being allowed? There is one covering note here where GDC must be informed of matters of substance affecting GHL. But I just raised that as a point of interest.
Thanks for that, Robert. I would hope that our intensified relationship with the GHL, they would signal those things well ahead with our discussions. And I mean, would the council be adverse with your example? Well, we may not be, but at least with our discussions, we would have some input into their strategic plan. I'll allow Mr. Proudfoot to speak.
Whether it's below 10 million or not, we'll still be coming along and telling you about that. It will be sale change.
Of course, one of the major changes we've got on that SOI, putting down returns that we would like on specific assets and what the industry benchmarks are. Of course, we having discussion around those, property holdings. Well, I find that one's a difficult one to find an industry standard, but I guess giving it a reasonable range gives us a bit of an idea anyhow. Thompson.
Thank you, Mr. Chairman. I just note on one of the appendix 1 on page 16, the first bullet point, and to keep it consistent with page 1916C, I think we should actually have in there that to increase the minimum dividend rather than increase the dividends to 1.8, because if you go on to page 1916C or 16B, we've still got the 75% return for the forestry, and we've still got, and it states here that's a minimum distribution. So I think we should change that in the front page to be consistent and to be clear.
Yeah. Actually, I just noticed in the report too that we need to put a few noughts in some of those figures. If we actually took it as read, you'd find that we're talking about small amounts there, $40, not $40,000. So it just needs to be put in brackets, thousands, okay, above all those figures. Any other items around the SOI? What I'm going to do is I'll put the recommendations, but then I'm going to invite somebody from GHL here. They just want to give us a quick update on something while they're here. Okay, so I'll put the recommendations. All in favour say aye. Aye. Against carried. So would one of you like to come up? Okay, there's nothing you want to? Okay. Okay, thank you very much. Thanks for coming along for that brief amount of time. Righto, moving to page 76.
Oh, I move, Mr. Chairman.
You're moving, Councillor Seymour. Councillor Stoltz, seconding. Any discussion around that?
Again,
Councillor Thompson.
Again, this is going to be a problem we're going to have to deal with, and we have to deal with it the best we can.
And so far, nationally, we don't seem to have any progress with central government dealing with it. Mind you, with a change of government, that was always going to be delayed. But have we got any update on progress on that front, please, Pauline?
With regards to GST?
No, I'm talking about the actual Maori land and dealing with ownership, use and rates.
I will refer to Fiona because she's more of the expert. You come.
I mean, it's been continuous since the last government?
The new government is is reviewing it, but we've been given no information or lead as to what they will do or what they will review. So we have no information at this stage.
Okay, thank you for that. Hey, I've got a mover and a seconder, so sorry, Councillor Foster.
Yeah, just one question. 160 properties, 134k this year, 128k last year, with 18 properties that are now not eligible for emissions, which is 16k. 16 from 128 is 112. Where do we get 134 from?
Just a reference, the actual schedule is in the public excluded, all the amounts.
Right. Okay.
Okay, anything more? If not, I'll put those recommendations. All in favour say aye. Aye. Against, carried. Just to warn you, because it's coming up soon, is we've got the external audit plan and we've got the auditors that are going to come online with us. Rather than get caught too early, I programmed them for the 10:30, so we'll just move our agenda around to accommodate that. So we'll just bypass that as we work through it and come back to it. Okay, we're on to page 80, and Pauline tells me that on page 83, the graph there isn't quite right, so she will correct us on that. Oh, we've got an updated copy.
Yeah, you have. It's handed out to you. So it's just had what happened on page 80 was a duplication, 83, I should say. You've got a penalties graph, but it's actually a duplication of the graph that was on page 82. So the one that you've been handed out is for the page 83. So the main things to be aware of, as it states up in the summary, that the statutory write-off for this year is 507k. And last year we had 2 applications in 2017, one in the beginning of the first quarter, which accounted to 225k. And at the end of last year, there was another application of that of 459k. But as I say, this year is 507.
Question at the moment, is that going to be then for the whole year, or will we're nearly at the end of this financial year?
This will be the only application. We're back on track.
Thank you. Can I just ask, the graph we've just been given for 83 has got, and I'm sorry to be dumb, but actually it's penalty 1, 2 and 3, because the first graph, is that what I'm reading? Penalty 1, 2 and 3, is that what P means on the margins? Because the graph previously didn't have, it's not quite replicating the same information.
So I'll just give that, and if I don't get it right, Fiona will tell me. So on the first page, on page 82, it says, what is the total 507? What is it made up of? And it says it's made up of penalty and rates, and that gives you the application of that. When you go over to the next page, or the one that we've just given out to you, that's the breakdown of the penalties only and how it was applied, either if it was a penalty 1, yes, penalty 2 or penalty 3.
Which is covered in script point 15 when I read it again. So can you please tell me why, through you, Mr. Chairman, why are we writing off rates on general land when we have actually the ability to sell general land?
At the moment, we're reviewing our process around rating sales and abandoned land sales. Yes, we can do it. Some of these properties have got dwellings on, so really we will bring a paper to council to discuss whether you want to do rating sales on properties that have dwellings on.
Well, can I just supplement you to that, Mr. Chairman? You know, at the end of the day, we collect rates off the willing ratepayers. And I think that I would like to see us not include these general rates as written off for now, if we're still looking at how we're going to deal with general title properties who haven't been paying their rates, because we might choose to do something different. And if we write this off now, then that takes that off any bill that is owed to us, short of, is it a fact that you can't collect it after 6 years?
Aren't we required by law to, after 6 years, to do this? And as on page 81, this doesn't actually include a number of them that are already in the process down the bottom there. So, but I take what you're saying. It's almost as though you need to initiate something before the 6 years come up to make sure that you actually have the option to follow it through later. So would that be able to be enacted as part of your review?
Yes, definitely. I think the part of the problem with the rating sale process is that it is a very long drawn out process, and from the time you initiate it, which might be 3 years before, is when you can actually go to sale. It's not something that happens within one financial year, so you're always going to get some rates that will have to be written off.
Yeah,
even
but
if you
the
are
point
going
is
through
that
process. And yes, we certainly do.
We could just start something, even if you don't enact it straight away because of resources applied to it. At least it gives us the option. But anyway, Councillor Stoltz.
Thank you, Fiona. I'm just going to page 84. I know we don't have a lot of influence on what we write off or don't because it's set by government, but on page 84, number 19, we've got an annual budget of 326. But at this stage, we will have $180,000 shortfall. Where are we going to get the $180,000 from?
Effectively, you're right. If you always, if there's a, you plan for a certain amount and it's higher than that, you're going to have a shortfall. And that happens, indicate that as a variance. Overall, the position in that area, there are some other savings, either through remissions or for other areas that coming back, just back on budget with regards to those. But you're right, if it is an extended period of time, you then have to increase that provision.
So you're relatively confident that overall the rating budget will be neutral?
For this year, we still were forecasting back to budget over the overall, yeah.
Councillor Thompson.
Yes, coming back to this graph just for a moment, if we don't mind. These write-offs, are they just the year 6 of each individual rating unit? So what we can assume is that there's 5 more years of unpaid rates to follow behind these.
Councillor Dowsing.
Thank you. That touches onto my point a little bit, except obviously we knew that there was 5 years preceding this with these rates that we're writing off. How's our modelling out by 180,000 if we know these debts are coming due this year? We knew we were going to write them off. What is it that how is it that we're not calculating the penalties correctly?
For your worship, you're right. The setting of this budgets were back in 2013 and 14, and that level at that particular time was at a lower level. And so through the course of the long-term plan, the levels were base plus inflation from what the preceding years were. The bulk, or the majority, if you see the sort of things there, is the penalties that are increasing those kind of the cost on that. But the original budget was based on 2014 achievements.
Just supplementary. So we don't review this as part of our annual budgeting. It's set and set aside.
In the annual plan, we usually do, but we have a couple of things with that. The 2016-17 was a 322, so they're within that budget. But that was because they didn't have 2 write-offs in 1 year. And so therefore, now we're reviewing that whole process. What is the realistic, and reviewing over the 5 years when it will occur, what do we actually have to write off? Same questions as you're asking, if there's any form of recovery of any that we can get back. I would be also looking at that you didn't have to write it off until you actually pursue everything and keep it on our books. even though you cannot pursue it, you would just still keep it there.
You know, that's fine. I mean, I'm less concerned about the pursuing of what is essentially $10,000 worth of debt and 25 worth of penalties. It's a very small amount. It's the greater that I just want to see. Make sure we've got a handle on it for next time we budget.
Okay, thanks. Fiona?
I just wanted to say that when it comes time to review the revenue and financing policy, which we're starting later again this year, is that one of the things that we'll be asking council to consider is whether we need that P3 penalty, because that is the penalty that is a penalty on a penalty as such, and it's cumulative, and this is the one that is really pushing the debt up, and we don't always get a lot of that money back. So it is one that we do use as a lever to look at getting debt under control when we're negotiating with ratepayers, but it does overinflate it, and we did stop the other penalty as a result of it a couple of years ago for the same reason. So, yeah.
Okay, so Fiona, with your statement before about how you're reviewing how you deal with statute barred rates, and also chasing up overdue rates and so on, when is this review likely to be done?
We've actually got meetings scheduled with Pauline on our debt collection processes coming up in the next couple of months, and we've recently sent our senior debt person off to a national local government conference about debt collection. So we're reviewing that imminently in the next couple of months.
So shall we put that on our action sheet to come back to this committee with the results of an updated process?
Yes, that's fine. We'll
thank you. Righto. Did I get a move and a second? No, I did. Okay. All in favour say aye. Aye. Against carry. Oh, we didn't. Oh, I'll move it then. I need a seconder. Thank you. And I'll assume that you're all going to say aye again. Okay. And have 2 or 3 papers, right? Oh, Councillor Stolt. Okay. So, as I said, we'll bypass the external audit plan, and we're ripping through the agenda a bit. Page 112.
Through the chair, just to actually, as it says in the summary page, that the forecast year in position didn't take account of the reforecast of the recent flood events. We will be assessing that and getting back to you the impacts of that within the next report, but we are assessing that as.
I've got a general query, and again, I could probably raise it at an assets this afternoon, because, without all this extra work that we're going, we know we're forking out on for the roads and all the rest of it. But aside from that, I noticed that there's a few areas where, yes, we're going to work within budget by year end, but the thing that worries me a little bit is that some of the work is not being done in particular areas. So have you got any comment around that?
You're talking with the areas with infrastructure where there is...
Well, like wastewater, for example, I'll quote one.
So some of those things that were in the wastewater, they've got on page... sorry, I just got it there. Page 122, where it actually talks about the activities, and then there's some of the differences between, on 121 is a table which says the activities. And in that table, we've got under revenue, just to confirm, so you're seeing the same things, is also what you would receive in the rates. So that a little bit different than what you normally would see, but you can see it against budget. But when you see on the other right-hand side, there is what you receive is the net surplus against the budgets. So, but when you go over on the next page, there's an explanation, okay, of where there may be some of the variances.
Yeah, I do see that. So just taking, for example, wastewater, I just picked that one out of the air.
Yeah.
So we're still forecasting that all the planned work will be done by year's end.
There's two things. There's a capital program and then there's the operational program. So in the operational program, which is in the surpluses and that's recorded on page 121, and it says the capital revenue associated with that. In that particular one, and for wastewater, a lot of that was interest. So where it was that they perceived to be the interest at that particular point in time was less because of some of the capital programs from previous years not being at there. So that refers to lower external interest, and there was the special projects cost, which the special project cost was the wastewater treatment option, and the feasibility costs were in there.
And just to reinforce, when we talk about capital works, all the operational work that's done with that capital project is capitalised. So that's treated as capital, is that right?
Two things. There was, in this particular plan, there was a special project which was operational, what they believed that they needed to do in this year that was not deemed capital. And so they split that out. I think it was 281 for the capital portion of work that they would need to do in this year, and I think it was 295 for the operational costs. And where they are at that, they've managed to work with what they needed to do, be slightly under in the special projects part of that.
Okay, Councillor Dowsing.
Thank you. Yeah, I had a couple of questions, but I'll just stick to the same theme at the moment, which is around the stormwater as well. And I think it was the last council meeting, I congratulated the Chief Executive on being up to date on DrainWise, as indicated in her Chief Executive's report. But here, it looks like stormwater, we're tracking to be $1 million behind in the capital expenditure, and then the DrainWise project is tracking currently $2.5 million behind in this report, and looking to stay at around $2.2 million behind schedule in the reforecast. So I'm a little confused as to how the numbers can be such a big variance here compared to the previous report that said it was tracking up to date.
Through Chair, in answer to these particular ones, they relate to the carryovers that went to the Finance and Audit, the last one of the 3rd of May, where they said the stormwater Douglas Street, that needed, the work that they needed to do for that needed to be carried over into year one. And so there was a number of projects that they identified that they wouldn't have been completed by the 30th of June 2018, and that they needed to just put it over into the year one. So there was a stormwater for Douglas Street, there was the wastewater T-pipes, wastewater Mangapapa, and then there were some other wastewater projects that were identified that needed to be completed in the first year, and the LTP was adjusted for those projects.
Stormwater project.
There was stormwater and wastewater, that's DrainWise. So there's two components.
Shall I carry on with someone else things on this theme? Oh, yeah. Sorry, I just wanted to get some clarity as well on 116. There's just some really big variations in there. I found this table really hard to read actually, where our total net working capital has a variance of 30 million. Our total net funds, sorry, 116. Our total non-current liabilities have a variance of 12 million. I just didn't see any real information about why those large variances.
Most of that is about the classification of borrowings. If you look under on page 116, there's a heading that says current liabilities. Now, at the particular point, at the end of the year, they classify what's current and what's non-current, but during the course of the year, they don't. So when you look under borrowings, which says number 15, under current liabilities, it actually says 0 against a 12.6 million. And then if you look under the non-current liabilities at the end, it says 47.2, which is classified all into there. So those differences between the classifications in current and non-current will be revised to actually see where it sits at the end of the financial year. But 47.2 is the total borrowings in there. As to the others, I'd have to come back to see where the classifications are and give you the more of a breakdown.
Okay, and just one more. Can you tell me that we've got on page 114 a gain on property value revaluation of 6 million that wasn't forecast? Do we know, or 6.9 million? Do we know what that was relating to? Is that just general?
Yeah, they'll do well, it's mostly on the asset values. They will do it at the beginning of the year. What are the classifications that it has, what it comes out at, and it's just the assessment. Yeah.
So it's not one specific revaluation?
No, it's all the infrastructure, okay, everything, right. Yeah.
Hang on, Robert.
Yes, through you, Mr. Chairman, page 114. I'm just interested in the line that has note 10 beside it, expenditure on operating activities. Okay, so we're 35.9 million against for the year to date against a budget of 37.6. So we're 1.7 million favourable there, yet we're forecasting for the end of the year to be over $1 million unfavourable. So somewhere along the line, there's because $2.8 million we're going to be overspending. The explanation that you give for note 10 is about over expenditure. However, we're actually under at the moment.
For the Chair, there's a couple of things there. Just now you've passed 507K for rates write-off. So when we forecast the year end, that's the year end position. So there are some of the things that we've got in there that won't be to an end of year position. There may be some other classifications that they may be looking at that will occur at the end of the year. The other things that they were talking about, that there was some front-loaded emergency works that occurred at the beginning first 9 months. That's saying that that part is over, but in other areas are under. So it's basically more of a timing issue at that stage. So we were trying to forecast to the end, was trying to calculate what are all the costs that are going to come by 30th of June.
Thanks for that. I'm just trying to find the exact page, but where we have the statement of financial performance by activity, I think it's 121. Yeah, 121. Yeah. Yep. And just the question I had there was on the property line, about 2/3 of the way down that page. I see that we were expecting budgeted revenue of 4.4 million there. We've actually received 626,000. It seems to be quite a big variance here. I'm just wondering if you could explain that to us, please.
Through the Chair, yes, that is. This is where a little bit confusing when we got capital revenue. And so when we assume that we're going to get the capital revenue for a number of projects, that sort of skews that, because we have the capital expenditure under another line, but we're only talking about the expenditure on operating costs. But in here, we have to record all the revenue received, be it operational revenue and capital revenue. So the capital revenue that we've got on a number of projects, which we know are not going to proceed this year, which is, or there may be a bit of a timing difference. Some of it was the Lawson Fields Some of it was also the pool, which was the bigger projects that sort of skewed those results.
Yeah, there is an explanation there, but it's under theatres and you might not have tied that up. Councillor Seymour.
Thank you. My queries go to page 121 as well. Thank you, George. 121 and on projects and development, we've spent substantially more year to date, and we're looking like ending up with a substantial, well, it looks to me like the last figure is credit, but if we're going to be spending another 568 by year end, which is a negative figure, I just wondered what those projects were that we've spent so much more than we budgeted for.
I can give the breakdown of what it is, but this is this table is only year to date, doesn't actually give you the forecast figures. Okay, so that just says what's those positions for each of those activities where we're tracking year to date. But effectively, that is the project management times that we do on the major projects and then they assign those costs to the capital projects. We will have to review the credits against those and just making sure that the capitalisation aligns with the capital projects. So we will review that and come back to you, specifically on those.
And I just wanted to make a comment subsequent to the chairman's comments around wastewater, because while we had a substantial budget, there is, and we can maybe address this further later, we don't seem to have done that amount of work, and we look like spending 5.7 million, and I don't think we've seen, don't seem to have seen as big an outcome as one might have expected for that level of expenditure, but it can be discussed more appropriately probably this afternoon.
And I can give you more information on those particular ones if you need. Yeah.
Right. I mean, I do note on 122, back to my original question about projects and development, where there are some explanations, and it actually says higher than estimated salary cost and professional service costs are the main reasons for the overplan variance and expenditure. So we ought to be, you know, we're in a business of continual projects, even if they're not all large ones. So all I'm really saying is we should be getting that closer to the mark. And then down to the bottom of theatres, where currently the income is less for not receiving, and you can all read it, third from the bottom, lower than estimated salary costs on 122 as well. Is that because we don't have the Lawson Field operational yet? And it might be a question that might be followed up by Councillor Cranston's committee, but I think the council would be interested to know, because there are substantial staff at the War Memorial Theatre. Once that other theatre becomes operational, will there be some crossover rather than a whole bunch of new staff just sitting in the Lawson Field Theatre? And maybe we can flag that for a different committee.
Councillor Cranston.
Yeah, every time I see them on community housing, I get a little bit confused. Year-to-date budget for expenditure on community housing is 643,650. Year-to-date expenditure is 740,000, so there's 100k over there. I don't know what controls we've got there, because what are we actually expending to that level on community housing? A lot of the repairs and maintenance sort of stuff we've been doing for more than this financial year, that's sort of gone back a couple of financial years. So when you put that on a per unit basis, that's an incredible amount of money to be spending on the community housing. And I just don't get what's happening there. You know, it's just not working like it should be in my eyes.
For the chair, I can come back with that, with the breakdown of what it is.
Councillor Thompson.
Thank you, Mr. Chairman. I'm going to go back to an old proverbial one that I've sort of spoken about over the years, but it's just a reminder really it's on page 123, but it's a bit of a general. Now, the idea of internal loans is sensible, because we are rating for replacement of capital assets as they need replacing, and we end up with money in the bank, and it's far more sensible we use that money than and at a favourable interest rate than have to borrow money to carry on with work. But however, we see on the top line of 123 that the level of internal loans now is 75 million, and that has all of that money has been spent on capital activity. Okay, it also has a liability to other activities, so therefore we have to pay a interest rate on that 75 million to maintain or keep the inflationary level. So we have a liability to other activities with that 75 million. It's sensible to use it, but at the same time, we've got capital activity carrying on, and we are borrowing up to 100 million in the next few years, which means our total liability, internal and external, become closer to around 175 million, both of which will pay a higher level of interest on the external borrowing. We've handed this building over to GHL, which effectively takes another 15 million off our books liability, but it's still a liability. We're talking about $200 million odd worth of liability, for which one way or another we will be paying interest on, or have a responsibility to interest. And so we've just got to be careful. We've just got to be really careful of how we, well, I suppose we just have to watch our expenditure. It's as simple as that.
Thank you, Councillor Thompson. Councillor Dowsing.
Thank you. Just to clarify, I don't see internal loans and debt that way at all. You're double accounting essentially, because the internal loan is simply a function to provide liquidity to council's resources, whereas external loan we pay interest on. The interest paid on internal loans simply goes to cover the external loan expenses. So there's no, so you can't account for that interest twice. We're not paying it anywhere. The interest paid on the internal loans is simply used to pay the external loan interest.
Therefore, on that basis, we are putting money aside for replacement of assets that inflation is slowly eating away, and we are not getting that interest on that basis. We are not getting the interest on that money to cover the inflationary cost of, so that when we come to replace that item, we in fact haven't got enough in there.
No, well, that line item does get the interest, and it's held against that item.
Yeah, in a way that we, as you're saying, part of it, there's validity in both parts. So when we're saying we want to draw down a loan, we look at all the available cash that we actually have, and we say, okay, we've got this, we only need to use that. So that actually gets our lowest interest rate that we possibly can be applied. Now, if we did taking that out and saying, okay, we've got depreciation reserves, or we've got other special reserves which account to, say, 40 or 50 million, and we left that alone to earn interest, in the majority, I've never ever seen it perhaps yet, receive more interest that you get on those investments than what you would reducing your overall debt, because always when you have to borrow, that interest rate's higher than what you receive in investments. So what we're trying to do with the reducing your overall debt is to use your cash flows as effectively as possible. So there is things that you are doing. If you wanted to use something in the future to draw down, you know that you will have to have debt for a reserve that you may have provided for, but effectively it is only for the cash flows, reducing the amount of debt that you have to draw down.
Yep.
That's exactly the explanation I made, and the thing is, and it is correct. Our liability is, we're using our money to avoid external debt, but it's still our money, and it still has a liability to what it was collected for. And my statement was totally valid.
Any other comments? Yes, only.
Animal control is higher than annual plan due to higher than annual. Stock control income received from the transport agency, which was not budgeted for. If you go back over to 121 and look down, you'll see the income received and what the expenditure is and what the surplus will be. Bear in mind, we're almost into the new year. Yesterday, I was given to understand that 180,000 was integrated into the operations and that there would be some capital required in terms of replacing vehicles. I can't understand when you have a surplus like that, we still have staff at the coast on 20 hours a week doing a very good job. And I've hammered away at this and haven't been able to get an actual detail on figures that have been allocated. And the transport agency, why I feel so personal about this, Mr. Chairman, is I too lobbied alongside our staff to ensure that we got extra funds, not only for fencing out the rivers, which were dangerous, but to address some of the staff problems, which I understand is operational and none of my business. But I don't think it's correct. I don't think it's correct that we should have people up there on 20 hours a month when they're required to be doing a job.
Okay.
We've got the surplus.
Can I support, can I support Councillor Burdett on that?
Oh, that's in your committee, isn't it?
Yes,
yeah. Can you answer that, please?
No, I can't. He's absolutely right. We had a substantial conversation. I looked around to see if Mr. Zannon was in the room, and he's not. The very fact that there is a surplus is the issue that would be of some concern, and whether funds have been taken from that area to be used somewhere else, because all of the explanations Councillor Burdett gave just now about a vehicle and or several vehicles and resourcing was given yesterday, but it would seem to be unusual if there is a surplus. So perhaps we could have a breakdown, because we didn't have a breakdown for EP&R.
We'll put it on the action list, thing that it seems to be.
And can we note that it could go to both committees, seeing both finance and EP&R, please?
Okay, yeah.
Thank you.
So we've got that, Heather. Thank you. Moved by Councillor Stolt, second by Councillor Burdett. All in favour say aye. Aye. Against, carried. Right, page 126.
I think there's not an awful lot of different than as per other previous years, months, I should say. It's just saying that is 46.7 million is the net external debt. And in your other tables, if you were looking at 129, just to be aware of when you're looking at these kind of things and where risk may be, is how much of our loans is covered by swaps or options, and that graph gives you the what our policy is. And if you look on that graph on page 129, it says on the right hand side, it says a minimum is 55% and a maximum is 90%. We're currently covered at 68% for the future 12 months. Which is obviously in policy, and then it breaks down over above the graph the percentages of where it falls within the different years. So when you're looking at these kind of reports, kind of look at those to see how much are we covered for future interest and the loans, and that's a kind of an important graph, gives you an idea of all your policies.
Yeah, so on page 130, of course, you comment on and was one of the issues that we raised before about a policy coming up to the long-term plan of reviewing our debt position at those peak areas, and you're working with our advisors, and I presume after you've had some discussions with them and they've firmed up their thinking around that, they're going to come back to us and discuss that with us. Is that right?
Yeah, for the chair, they're going to come back and give you a workshop and just give you the long-term view, what's impacting, what are the things that we're doing here at GDC with where we're moving to different covers is what's where you need to be. And so they'll give basically a workshop. I think we've got it in July or August, but we've got them already booked in to come and give a review.
August, okay. So, okay, Robert.
Just through you, Mr. Chairman, I think the indicators on page 131 at the end of the paper, I think you know, the council comes in for criticism from time to time, but I think they've managed the treasury function particularly well, and I think we've got a good time range of maturity of debt facilities. I think that you know, we've got good cover, and we're well within all of the ratios and covenants. So well done to the team for that. Thank you.
Yeah, it is an important area. I see that over the United States, they've gone and raised their interest rates a little bit and programmed to have 2 more this year. And while that doesn't directly affect us, it does indirectly because the big banks in New Zealand, and I guess although I don't know whether the local government funding agencies influence, because they must borrow the money from overseas as well. So in effect, those interest rate costs are going to come to New Zealand, even if they are minor. So Councillor Seymour moves it, Councillor Dowsing seconds, and all in favour say aye. Aye. Against, carried. Okay, page 132. Now, this is our integrated reporting. So,
I'm happy to speak to it, Councillor Wilson, if you like.
Oh, yeah, good, James, if you can come up here.
Yeah.
That'll be good. How are councillors feeling they're dealing with these sorts of reports? Are okay?
Through the chair. So this is the second attempt, if you like, at the integrated report. So it is still very much a work in progress. It does mirror substantially what councillors have seen previously, and we've still got some work to do to actually finesse it going forward. I apologise in earnest for some of the repetition, and that's largely due to the way that Interplan works, which is the system that we're utilising to bring this report together. I won't be able to answer every single question, but I will attempt to. And I know that we've got our CEO here too, who's also able to assist with any questions. And the reason for that is obviously it is an integrated report. It does traverse a great number of the activities of council. I think going forward also there's an opportunity for us at an operational level to actually look at how we utilise this report. And I think on the back of the long-term plan, there's an opportunity to actually look at the targets a bit more and actually bring this up a level to a governance sort of view, as opposed to what can be quite operational in some aspects of the report. I'll defer to my learned friend, Pauline, on matters of a financial nature, certainly across those areas of the report that relate to my space or my hub and internal partnerships. But I'm happy to take some questions, otherwise the report's taken as read. Thanks.
Councillor Seymour.
Question around the majority of, this is on page 134 and it relates to the performance measures, 16 off track and 21 on track, but it does say, particularly in relation to responding to requests for services, so it talks about various teams not meeting the target timeframe. So can you explain to us what you're doing about that? Because that's what we tell the community and the public and everybody to use. It's the process that they should put, you know, everything that they need sorted as a request for service. So if we're not meeting those targets, and that's quite substantial, can you please tell us what we're doing to help do that better? Thank you.
Morning. Through the chair, just in terms of those RFS performance measures, by and large, they're related to Tairāwhiti Roads requests. So there has been, it's quite a technical issue too between driving two systems and customer responses and how our contractors are also dealing with that. We've linked up our customer services team and with theirs to try and address and clear that backlog. Some of these are the nature of the request for services are things that actually just can't be addressed within that time frame. So they may be those that need to come into an annual plan process, but there's also a whole lot of work around closing those off, which would actually reduce some of these numbers. So where there are controllable measures, the managers are responsible for ensuring that they close them. We get these reported to us operationally and asking the questions around why are these not resolved or how many of them just need to be closed.
Supplementary, Mr. Chairman.
Yeah.
But doesn't that tell us something about our roads? And that's quite, I mean, this paper was written before last week, so that taking all of last week out of it, it has to tell us something that we should have been hearing around our roads. But it also says on the bottom of page 140, a large number of RFS led to animal control and noise target performances not being met. So I do get that issue between the two departments overloading, but back up from that, our roads have been lousy, and we'll raise that again this afternoon, for 6 months. But then we've obviously got dog control and noise control targets that we aren't able to meet either.
Yeah, sure, appreciate that. And through the chair, what might be helpful for the committee is to get probably a bird's eye view across that whole RFS area, and you can see actually what the volume of those, when we're saying what is a large number, so you actually know what the large number is relative to other areas. And what I would say though is that we know that the RFSs have increased substantially, particularly in roading and in some of the more monitoring areas. And that's also a sign of, that the message that's getting out there around using our request for services as much as it is around actually getting the service too.
So wouldn't it be a good idea if the RFSs were reported to somebody's committee, probably to this one, on a quarterly basis by grouping?
Yeah, they used to be reported.
They come to our committees where it says this is the amount of RFSs these were solved in the time.
Only occasionally, not on a regular basis. Well, I think it would be good if they, because the chief executive said absolutely right, it can be made much clearer than what this little paragraph is here. Okay, we can have
it's certainly something we can, we'll review, and I'll just get a handle on, the frequency of those reports. I know at an operational level, it seems like it's every week. So we'll formulate something, and maybe it can sit within the integrated report to give you a snapshot view, or whether that's on a committee by committee basis is appropriate to the area of the RFS that relates to that particular committee. Certainly something we can look into.
Process, and it is, and good that it's working, as the chief executive said. It also needs to be able to be responded to. So exactly. We just need to have an overview of that, don't we? And how long some RFSs are open? Thank you.
And just on a more general question, okay, we keep talking about these performance measures. Well, what are the performance measures? Where are they?
That's probably another way as an overview, which I'd quite like to see, a simple summary sheet which says all of them and identified where they are, where they're tracking, and what they relate to. And it may be something that we can incorporate and put that in, so it's a lot easier.
Well, you definitely need it, because really we're only seeing half the story here. You've got a report on the measures, but you don't know what the measures are. So when we know what the measures are and they're not performing well, then we can make some comment and input into them. So that's what I've had a little problem with these reports. So somehow they're not quite right, James. And I still think we need to work on these reports to make it really meaningful, because that's why I asked councillors what they thought about it, but I think we need to do a bit more work. Okay, Councillor Stoltz.
Please correct me if I'm wrong, but don't we get this information every quarter at our committees where it says, say, for community development, this is the library project, this is where we're at, this is the performance that we're measuring, and this is how we're tracking to budget. So we are getting that information.
You're not getting all the performance measures though. And this committee should just have an overview of it. Yep, it's good to know that certain areas are performing well and others are not, but we need to see a breakdown of where they are. Otherwise, there's no point in having it reported to the Audit and Finance Committee.
Through the chair, you actually have had a breakdown of all the performance measures, and part of the feedback last year was that actually it was too much because there was about 100 odd actions in there, and you got tables and tables of it and decided that you didn't want it.
No, but what you can do is you can group them together. Okay, you may, like at the beginning, oh, well, it actually has how many performance measures there are in each particular area. Well, we would just want a summary of where things are going right and where they're not up to speed, because isn't that what we all need to know is how the projected work plan for the year is going, whether we're performing against that or not. Whether we're going to finish the work program by the year, whether we're going to meet financial targets by the end of the year associated with it. And that's surely what the Audit Committee is supposed to be doing.
There is work to be done. Can the script be updated? And I appreciate that everyone's really busy, but a lot of this data in the script is old and it's been a cut and paste job. I mean, if you look at page 146, it says the Chamber's modernisation project is nearly complete, with a positive reaction from the public and staff to the live streaming capability. Well, that would have come out of something written a few months ago. So, and I must say I crawled all over the infrastructure agenda in greater detail, and I've picked up a whole bunch of comments that need to be updated where projects have finished.
Nadine?
Through the chair, I think we're not hitting the mark here on this one. I think that there is possibly we need to just regroup in terms of the information that you're wanting, probably to include something around our risk as well, because we can give you all the information you need, but it's still not going to draw your attention to possibly what are the critical significant things that you should be considering around the table. Just kind of looking through the report as well, even though it might show you picking up on one of the points around those measures off track or on track. While there might be 57% of them that are on track, I don't know if it's giving you that confidence too that within that 57% or the 43% that's not on track, there are actually fundamental critical ones that you must achieve. So I think we will regroup and just try and fine tune some more.
Yeah, all it is to provide this committee with some tools to have a better input to this organisation from a governance point of view. If you don't have the information, you don't understand it, or you don't actually have it, you can't have any input. And I know it's a bit of a challenge of how you present it, and I don't want us to dealing with minor things all the time. It should only have a top overview, this audit committee. So it's just the trick of designing that together, and I can't see that we can't do it. So it's just a matter of us sitting down and trying to work that out. Okay, we'll work on that. Thank you, Councillor Stoltz. Second to Councillor Harker-Brown. All in favour say aye. Aye. Against carried. We'll break for a morning tea and then make sure you're back sitting by 10:30. external auditors. Yeah, well, suddenly I turned that on. So I've had a bit of a discussion about how I see things and so on, but we're going to have a different process next time. It didn't quite work out this time, and the way that I should meet with external auditors before they actually put their plan together. And I should actually have already talked to you people about what concerns you might have within the organisation so that we can get that in the plan. So it didn't quite get there, but Pauline's assured me that it's going to happen next year. Hey, Pauline? Yes. Okay. Okay, Heather just reminded me that when you do talk, when they're on there, they won't hear you unless you actually do put your microphone on. Okay, so just be aware of that.
That's not true. When you watch a meeting online, if someone don't use their microphone, you can't hear them. I'll share it back. Says the lady who don't use their microphone.
Yeah. So it'll only be on the screen here, okay? In case you're looking there.
If we get a presentation at council and it is on there, is that what the public see? Or do they still just see the meeting room? Okay, thanks.
They can ask for it though. That's broken.
When's the countdown? Where's the clock?
Just for your
yeah.
For your reference, there's two people that should be on there. Is the audit partner, which is David Borry. You've met him before, and Kieran Wright, who's
Kieran
also
Wright.
been, yeah.
Right, and Kieran Reid. That'd be silly, wouldn't it? Right, Kieran Wright.
Chairman, are we going to, I mean, I know this is pretty much set in concrete, but so at what point, what level of input do you want from councillors? Like, and we could pick on a bullet point, so we'd really, which is here, this is an example, we'd really like serious follow-up of that particular item.
Yeah, because the question is whether they can change their audit plan. Really, they're just presenting it, I suppose, today. Yeah, I mean, if there is any real areas of concern that
Well, the other thing that that interests me when I read it is, you know, 2% sounds like a reasonable level, but when 2% is actually 1.7 million, and this is on page 90, the materiality threshold will be 1.79 million. Well, frankly, that is an awful lot of money.
It's always that way, though, and it's always been, and that's what auditors do it on.
Yes, that's right,
so,
which is in the same box.
Yeah,
but
so
that's 85,000. So that's still quite a lot.
Yeah, that's a 2% is the cumulative amount of errors.
Oh, right. Okay.
So anything that is over 85,000, they will report.
Doesn't say that, no, does it? It says our materiality threshold has been set at 1.7, being 2% of operational forecast. So it should have had cumulative in there. I would have been quite happy.
Well, our system ain't arriving at 10:30 because it's past.
If we're doing a report like this in the future, when you get involved, do you think the chairman of the actual loaning should be also there, like assets, or if an audit on Pat's department, that she should be there? I know it's a primary audit.
All I said was that we are, as councillors, we would meet before.
Yeah, so
I met with them. Yeah, so if you want to mention that, I would have thought that the chairman of people in the areas of concern.
The chairman of the appropriate committee should probably be here as well. Because I was unaware that it was in. Yeah, and I think that's
Okay, so what we'll do is we'll actually start that item now. So on page 86, external audit plan. So any of the concerns or questions, you're welcome to ask them now. Staff may be able to help with some matters around that, but any comments, whatever. I suppose nobody's going to say anything now. Sorry? Oh, okay. Well, I've already spoken to them, you see. Robert.
Yes, through you, Mr. Chairman, I'll just kick it off with a comment. I know that a number of members of the audit team have been involved with audit of GDC for a number of years, and that's good. What interests me, as well as that, is the experience that auditors have with other councils and where problems or suggestions for improvement have been made through learnings from other councils throughout the country. Do they have some kind of forum where we get a bit of cross-pollination and ideas coming from the other teams around the country? Thanks.
The Office of the Auditor General, at the end of the annual reports or anything, the long-term plan, they take all the matters of that were raised for councils throughout New Zealand, and then if they give feedback on what worked really well. They have exceptions that didn't work well, but they actually say this is where you would look to for this in this particular council, this is what they're doing and how they're reporting, and they give you a set of sort of models with it. So that's usually how it's fed through, as I say, for the Office of the Auditor General.
Yeah, there's a bit of an assumption on page 96. The community housing is expected to be transferred later in 2018.
Again, I was reading again. I thought I had gone through exactly with it, and I sent them a comment with regards to that, and I said it should be, could be, and the other things over the process of it, what would, where it says work to be performed, we would hold discussions over possibilities if it did occur. So yes, I wanted to stress that to them as well. Yeah.
Marked for the very same thing, because even the work to be performed actually says we will hold discussions with management over the progress and status. And I think that it's really important that council has some contribution to make in that, because it's actually not going anywhere at the moment. So I'd like council on the Community Development Committee to know what that conversation is that's going to be had. I mean, you can't do it today, but I think Community Development Committee should be familiar with whatever that information is that's going to be discussed. Yeah, you've got it marked too.
I would like something further done on that, because the table I referred to before, where they've got a budget expenditure and it's already over 100,000 in excess of that expenditure. who's determining that? What are they just going out there doing this expenditure? Surely they should be obliged to meet the budget that we've got in place. You know, if they're already 100K above it, what's driving that, and how can we be a factor of that? When we went through that table, it's probably the only thing on that table that's really out of kilter with the budgets.
There's two things. One is our actual management reporting, and the second thing is how the audit would come through. And from their point of view, they just want to know how you're going to treat that from the transfer. So, and that's accounting sort of things, yeah. But yeah.
In reality, can this not just be simply removed because at the moment there is no transfer of assets to be done? It's not council policy yet. Yeah.
I did say that to them email last night, saying that this is only a possibility, and if it hasn't been defined, you probably don't need to go into the treatment of it. But it's perhaps a cost-effective method that if you've got them already here and they're giving you opinion of how it's going to be treated, then you've got, you know, already done at that particular point in time. So that's just, yeah.
I'd just like to have a question asked if it's a common practice around other councils offsetting deficits and surpluses, and looking at our whole story of why we do this and the effectiveness of it, and maybe how it affects the performance of those particular activities as well. Because we see a lot of surpluses or deficits that have been offset from surpluses from other activities to balance it up, but we don't actually know how that has affected the performance of those particular activities as well. Because if for some reason the budget isn't met by one activity for 1 year, and then there's a surplus there, and one activity is over committed, and it's offset onto that, and we're told by a summary at the end of the day that this has been offset by that, and it's okay. But I'd like to know what the consequences are, and so that's right up the auditor's alley of reviewing that and that kind of practice in other councils as well.
When you say offset, what are you talking about?
Well,
are you talking about internal borrowing or what?
No. We generally get a lot of reports coming through and saying, well, this activity was 200K under budget or whatever, or over budget, but it's offset by such and such an activity that was 200K under budget. So, and you kind of think, well, if that activity isn't meeting its budget, then there's a performance issue there.
There's two parts of that. Is when you're actually doing your annual report, they will give an overall view of how the council has performed, but then they will look at things, the activities themselves. So for argument's sake, one of their usual point of emphasis is your capital expenditure versus what you plan to do. So that they will give those kind of an overall review of that, and they also look at that against all the other councils. The individual activities, if there's a great discrepancies, continuous discrepancies of what you plan to do to actuals, then that becomes a point of interest to what the auditors will be looking at as well. But in the first instance, if it's not, it's an aberration as opposed to a normality, then they would actually come back as a point of interest.
Yeah. Okay. Yeah. Thank you.
Yes, through you, Mr. Chairman. I'd just like to know whether Pauline or other staff have any concerns about the report or areas that they would like to see included or covered, or are they feeling pretty comfortable with the direction? I mean, we pay a lot of money for this. I know it's a statutory obligation, but we've got to get the most out of it that we can.
It is a standard, and this will probably be the first time where I've been to beginning to end, was last year was part of it. There was others had emphasis in it. So I been involved in it. I would quite like to see how they actually manage our forecasting or the expenditure and the reporting of that, and what they actually take up as a matter of emphasis. So, and what they come back to. So yes, that's the area that I'd be looking at, and actually seeing how they actually are recording it and noting it.
Okay, Councillor Seymour, moving in the receipt of the report. Councillor Dowsing is seconding. All in favour say aye. Aye. Against, carried. Okay, it's unfortunate our auditors, apparently they could hear us, but...
Can you got something?
Can we make a point about that right now? It's exactly the same thing for the district licensing hearing, where we had a lawyer in Auckland who was for one of the submitters. They were supposed to be talking to us, so we had another person who was on the screen, and it all failed on Tuesday. So it's just not satisfactory.
Yeah, well, a good way of doing it would be just have a trial run. Have a trial run before the day's meeting starts, just to.
Sorry, can I just make a comment through the chair, just on this occasion anyways, that often the problem's not at our end. So this is like a phone call. If their end's not working very well, we obviously can't have a conversation. So I'm just aware that there's a part of an issue at the other end of the line, not our end necessarily, just an observation. Yeah, I'm not just making the observation that on this occasion that's what it is. Thank you.
Hey, look, we'll move on, and we'll go to the next agenda item. Okay, so we're on page 156. Sounds like Malcolm's got something to say. Is it you, Malcolm? 156. Hello, Dave. Welcome.
Welcome, councillors. Yeah. Okay. If I could speak to the report.
Yes.
Usually there's two audits. They have a technical audit that looks at the, how we deliver stuff that goes on the ground, and then there's a procedural audit, which is the finances. And so now what we suggested is, if instead of having two separate audits, can we start having one? It just saves. So it takes about a week to review, and that's the process. So there's some improvements that have to be done. And so in terms of the contract tenders, so those are being resolved now. And the technical issues where we're working with the agency with that. So it's got a sign off, and it's probably timely as we look into the next 3 years with budgets as well. So I'll take any questions.
This was the one I actually was more had my head around before when I asked the question. This audit, was that done as an independent audit, or was that done in, that is an independent audit?
Yes, it's an independent audit. So the Transport Agency have they call it an investment and finance team.
Yes.
And so they provide money to every road controlling authority, and also the Transport Agency too. So they used to be the old Trans Fund. So they've been brought in, so it's totally independent.
Just the question was asked, could this be some sour grapes because of our relationship issues with
no, they're separate. So they audit their own internal highway team as well.
Councillor McLean.
Thank you, Mr. Chairman. Can I ask you, Dave, do you accept that report? Do you agree with it?
Well, I mean, you always, do you take it on the chin? I think there's some things, there's always improvements. It's like, there were some things about delineation, and we could fight it to the ditch, but sometimes it's better just to accept them and then move on.
Yeah, I think the format of the audit is good, where the recommendation comes at the end of their findings, and then Tairawhiti Roads then respond to that. And as an audit committee, it's our job to make sure that those responses, if we accept that they are appropriate for what the findings were, is actually enacted from then on. And so that's the important part. And assets, of course, the committee need to oversee that as well. Just one of the things, and Councillor Thompson raised it with me, which I had a problem with too, was just around that aspect, and that's on page 166. And that was to do with the audit exemptions. And I didn't quite understand the logic behind these audit exemptions.
Yes, through the chair. So this afternoon at Assets, you'll see a paper about audit exemptions. So it's not a health and safety issue. So every capital item basically has to have a safety audit. So as we said, things like Wainui Stage 2, it's a new asset. And so the safety audit, what it has to do is there were concerns, valid safety concerns that, and an independent team, they come in and they review the design, they review, they provide suggestions, and then that's put into the contract. So, as we're saying, we've got our capital items like heavy metalling, or is that an example is that at the moment we're doing, we're actually not doing as much, but we had a $1.5 million heavy metalling program. So that was on 23 roads. So what it would mean is that if we didn't put the exemption in, is we'd have to get an independent auditor would have to review each of those 23 sites. And so our discussion, our argument is, well, the reason it needs metal is because it's unsafe. And so we need to put metal on it. But if it's just a form of a sign the form, well, then that's fine. So that's the process. And if that's the exemption, well, then that's what we have to do. But obviously, if there's safety concerns like new projects, and that's undertaken already. Okay, so, but what it does, and fair enough, if they're saying that if you need an exemption, then you actually have to sign the exemption form, and we haven't done that. So that's what they want.
Okay, thanks, Dave. Councillor Seymour.
Yes, thanks very much. I think it's really interesting and useful information. But the matter around safety, which is, it comes from top of 163, about placing significant resources around improving safety performance. And there's been a number of cars leave the state highway between Gisborne and Polliga Bay over the last few months, and 3 in about the last month. 1 is still sitting on the side of the road. That's not relative to this. But what I'd particularly like to raise is some work is being done around Rotatahi where trees have been cut back. The ditch is now quite substantial, and a white car was in there for a week. Now, I think we need to be looking at the safety of our roads. I mean, it may be that the driver was going too fast, or it was wet and it was slippery, but it actually does look quite dangerous, that particular area now. So since it's been raised as a significant resourcing issue to improve safety performance, I'd like to think that we are definitely attending to that. Because, you know, 1 car has been off the road for a number of months, but if you talk about 3 in 2 weeks, that's quite a number in 50 kilometres of roadway.
Yes. So what the audit team, when they went through council roads in the northern area and also in the west, and what they were saying, there was unclear, if you went on the Mata Road, there was unclear delineation if you went on Wainiki Road. So that what they were wanting is if a person is driving, they should see the same on those two. So some had, so some actually had like road markers, and one of the issues we have is a rural council, and it's just the way it is that, you know, we allow stop on the road, and they push some of the stuff over, and so even our mowers, they go through, and sometimes they find those pegs that shine up, and they get those. But that's it's more consistency that what they're wanting across the network.
Well, with respect, can I just follow that through, Mr. Chairman? Because if you read 163, it actually says in the paragraph above, acknowledges that safety is a priority, especially wet road crashes and loss of control at bends. It's not talking anything about markers or consistency. It's talking about the very thing that I just referred to. So while I hear what you say, and they do like consistent delineation, the paragraph above it, where it highlights the findings, it actually talks about what I was referring to. Potentially these accidents have happened where wet road crashes and loss of control.
Agree. The example uses the state highway, which this is just the council roading network. So that example is State Highway 35, and that will come through on its own audit. But
well, luckily we go a bit slower on the roads, on the council.
Yeah.
Councillor Thompson.
Thank you, Mr. Chairman. Look, the report, and I suppose we're going to have some ongoing discussion about it. I think, you know, we need to sort of get our heads around the ramifications of all this, and I think the Infrastructure Committee probably going to be the place to do it, because, you know, but to a sort of a layman looking at it, it actually looks very expensive, and you know, we obviously got work to do, and then if you had your colleague and the chairman of Lifelines, the manager of Lifelines there, he'd tell you that we have very little leeway with money, and so obviously we've got some major issues highlighted here that we basically have to deal with, and it is a concern. Like when I see page 167, where and to me, just looking at it, and not being a roading engineer, and down to the second last paragraph, you know, we note that low volume roads, and this is just one of an example for low volume roads who had their first coat seals greater than 5 years, and Tenoroto 10 years, and Tarapapa 8 years. And obviously they wouldn't have put that in there if it wasn't an issue. And so you've had first coat seals sitting there, which are going to break up if they are not dealt to and dealt to soon. Otherwise they wouldn't have put it in there. And then we have to then, on the other side, we've got reports coming to us to say that the volume of logging coming out of the west is going to increase up to 50% of our trees in the next wee while, which include like the Tenoroto Road. And, you know, I have this picture of a broken tar seal and mud all the way through there if we don't get on and deal with this, and yet it's never been something that's brought to us as needing to be done, and we're going to have to find the money to do it. So again, I think it's good to have this, because now we know the right questions to ask, and we can sort of get on with it, and I think we're going to need to. And again, it's a concern.
And I see the essential document, and it mentions in there that you're going to come back with an action plan about how you react to this report, and that will, I presume, will be reported to the Assets Committee, will it?
Yes, through the chair we can, or whatever is the assets, but a lot of the actions have been signed off, but we can give an update of that as well. So it can be we can always have as a reporting on it.
But I'm talking about, it says in here you're going to have an action plan put together by the 30th of June this year. So has that, I'm talking about this one. Yep. Okay, so I presume that's in reaction to the report about what you're going to do from here on in as a consequence of this audit. And that needs to go to the Asset Committee, and they need to be assured that the action plan is happening. Councillor Forrihinger.
Thank you, Chair. Reading through this, I personally thought it was a little bit rich that that a report with a big NZTA at the top of it is auditing GDC, considering that the function around our roads is supposed to be tied up. Roads are supposed to be having this kind of partnership thing. I agree with the sentiment of Councillor Thompson's kind of first question around the independence of it, because I did wonder the same thing, because it doesn't look like that it's independent, and it actually kind of it's in contradiction to the thing that we try to do in regards to a holistic network. It's good to hear from yourself, because like Councillor Seymour, I was also thinking a lot of these crashes happen on State Highway 35. That's not council's responsibility in regards to that. And also the report doesn't read like that they're actually just focusing on council infrastructure and not NZTA infrastructure. So I also think it's a bit rich that it focuses just on the stuff that we're controlling, not on the network as a whole, which is what, again, is in direct contradiction to TR, like Tairāwhiti Roads. So I couldn't help but feel that way while reading through it all, because it is written in that, to me, it is written like that. It actually doesn't kind of say specifically we're looking at these. And then also furthermore, we're going, this is the function for us looking at our own stuff, because there are issues and vast issues around the state highways, which NZTA is responsible for looking after. I did have a question around, do we have our own internal audit function that looks at the kind of same categories in regards to our own council roading network? And like, do we ask the same questions? And if so, have what we've found out internally and what they've kind of discovered externally, do they marry up?
Just asking that question, we get benchmarked with other councils or similar councils, and those results come through, and we can provide some of that information to you. So, and what they do is, it depends on the focus of the day. If they want, because at the moment the government is pushing safety is a real big issue in terms of the government policy statement. So that's where the focus comes through the auditors as well, and that's where it's going to be more focus.
I think just following on from what Councillor Whare-Hinga said, I think it would be important that we get a report from you, David, about this, because whilst I know it's an independent, but I'd like to see where you guys sit with these comments that are made. And I know you're going to bring a report out. I mean, I feel quite uncomfortable. I felt very uncomfortable reading this report last night. And if that got out, if that gets out into the news media, I mean, hello.
It is.
Well, I know it can, but unfortunately they're not sitting here, which is fine. But I would just like to see you either agree with these comments or you don't agree, and how it's going to be right, and when we get a better follow through.
They got the responses.
It is there.
I didn't.
McLean, the responses are there, and that's the whole purpose of the audit. And I did open with those comments that I thought the format was a great way of doing it, where they had their findings, they had their recommendations, and then we've got our response in relation to that. And I guess from our part, if we didn't agree that they were valid comments, they would have said so. But in most cases, they have taken it on the chin and said, yes, we believe the findings are correct. Councillor Dowsing.
Thank you, Mr. Chair. I was going to add a similar commentary to you, except when we look at the history of Tarawhiti roads, in fact, that we've just done a review of Tarawhiti roads and identified that we need to make changes across the scope of the business to make improvements on our network. The changes within this document seem very immaterial in relation to actually solving the problem. So whilst we've got this audit, and it's a great source of picking out some small issues, like the relevance of the way that we charge for our services and monthly billing versus a fixed schedule charge is it's not going to change any outcomes. So whilst this document was good in its format, I just think it's premature in terms of actually providing us with changes that will translate into improvements. Because at the moment we know that the big changes are at the structure of Tarawhiti Road's end, get that right, and we'll see improvements down the line.
Oh, sorry.
Okay, Councillor Dowsing, that is a different process. Now, this audit is done because we use public funds, and of course, New Zealand Transport Agency need to do an audit on anyone using their funds, and it's as simple as process as that. So what you're talking about is a different thing, but this is a required arrangement for New Zealand Transport Agency, okay? Councillor Foster.
Yeah, the other thing to consider as well is that we know that we're underinvested by over $80 million, maybe $100 million over the years. So if that money had been spent, would this audit be exactly the same? I doubt it. So, there's got to be some questions asked about the funding that is needed to keep our roads up to the standard that we expect. And that audit would be a lot better if we had that investment.
That's another matter. As we just said, this is an audit by New Zealand Transport Agency, a required one by using their funds, okay?
I just want to back up that if other councillors are going to make the point about barriers on roads and crashes, then it's equally as valid to discuss the status of that.
Totally agree with you. We're just discussing this audit, okay? Councillor Burdett.
I actually think this audit has been timely. And while I appreciate Tarawhiti Road's response, what it does do is not only send a message to Dave and his team, but it enlightens us as to some of the issues. I just have a question direct to Dave too, in terms of the transport agency and how they handle like New Seal, and I was referring to on the page 770 and 69, New Seal late in the season that packs up. Were they in the process of doing the audit while this was happening?
Yeah, so that's still so basically the contractor has to fix that, and that's just make safe. So it's more of a contractual.
Given the magnitude of the problem, because it's not just confined to one area, will that be remedied within the next construction season?
Yeah, just to answer the question, the answer is yes, and it's also happening across the country where we're probably pushing sealing outside the windows, and it's just not here because there's such a big bow wave of work happening, and our contractors and suppliers are, we actually asked them to start sealing in May, June, which is risky.
Aside from that, they've done well, Mr. Chairman.
Thank you, Councillor Burdett. Any further discussion on the audit? We haven't had a mover and second.
Yeah, I'll move.
Move Councillor Burdett, second Councillor Seymour. All in favour say aye. Aye. Against, carried. Righto, on to page 194. So you'll have read the report. I don't think there's anything else to say, whether you think that's a worthwhile venture or not. Councillor Stoles?
Thanks for that paper. And we had this discussion just yesterday, you and I. Considering all that we've just went through our 10-year plan, making the tightest budgets they are, like thinking last week, we were thinking where we're going to get 30K for this, where we're going to get 510 for the Wainaki. I personally think, and also two other things that we'll discuss soon, that we might have to maybe push this to the back burner a little bit. I'm not saying, like you say, we should be agile, and I applaud that. Yes, Councillor Dunn, he used that word. I do think just after we've made our budgets, it might be a bit of a stretch with a few other things coming online as well, that we might have to still think about it and how we can structure it. Maybe now is not the right time.
Before you make that decision, wouldn't you think the first thing you would do is ask our staff, management, how they feel about it? Nadine.
Through the chair, I think, I had to reflect a bit on what was being asked of me in the particular paper, and in particular of staff, in terms of where we had worked over the last 14 months to pull together a long-term plan that you're all aware of is quite tight, especially given the capital works. We've actually kicked things to touch around additional stuff coming into the work program of the shared resourcing levels that would be required to deliver on everything. And so the focus really was around actually how do we deliver that long-term plan in the best way possible, and getting efficiencies where we can, and efficiencies by way of changing working operations, etc., etc. I think that there was a clear view from council that if there was funding, that you would have put it into other projects that all had possible potential merit. In fact, we removed about 1.3 mil out of the budgets in order to keep the rates low at lower than that 5% threshold. So I would say that if we were focused on a quantum or a figure of $500,000, which is nearly a 1% rates increase, then I think that's potentially unrealistic to achieve. And I also kind of want to just reflect on the last, reflecting on the last 12 months, where we've pulled together to save $1.3 million off the back of a year where, we had a $5.1 million deficit. And that hasn't been an easy task. So to kind of have this at this time is quite hard on thinking about how it can be achieved. Work efficiencies, I think there's absolutely nothing wrong with the sense of asking management to go away and look at efficiencies around the place, and looking at how we do things differently, where we can be more effective, that's certainly something that we can accommodate. But I would struggle to be able to deliver if there is a monetary target of the $500,000, if that's what we're talking about. If we're talking about efficiencies and working in different, then I can completely say that we can support something like that and actively look for ways to achieve efficiencies in our working operations.
Thank you, Councillor Seymour.
Thank you. I'd like to thank the Chairman for thinking of this, but when I think about Audit, we couldn't do things to roads because we're trying to save money to get to the next financial year. I thank the Chairman for bringing up. I'd like to move the note of the report. You'll say that again. You didn't hear me. I'm sure you did. I move that we acknowledge the Chairman. I'm acknowledging the Chairman's report, and we move.
I'll second that.
Okay, I'll just make a final comment then. Look, I totally accept what our CEO says and the opinions of councillors around the table, but I put it on the agenda because I think you should always challenge your staff, and it's a chance for them to tell you whether they believe they're working as efficiently as they can, okay, Councillor Dowden, I'll give you a chance. Whether they're actually working as efficient as they can, whether there are savings to be made, whether the culture of the organisation is understanding that we are constrained. I mean, every organisation probably could say that, but sometimes after a time things get a bit slack and you suddenly have to reset again and refocus. But look, I'm happy enough to just receive the report. I feel it's my duty to challenge management and staff, and I'll never stop doing that while I'm here, which is not a heck of a lot longer. And it's not just because I'm trying to make my mark while I'm here. But anyway, there we are. Councillor Dowsing.
Thank you, Mr. Chair. I agree with the sentiment of this report. I just don't know that it's a process that needs to be entered into because essentially we have activity surpluses which could cater for this already. And if council was to make a policy around a target within an activity surplus for an upcoming particular requirement, for example, the knowledge that we have a wastewater build coming up, those are as a governance level, I believe that's where we should be setting the benchmark, is saying that by X date, we would like to try to achieve X amount in the activity surplus so that we're alleviating our downstream spending. But to do it through a savings plan with no real link to a specific usage doesn't fit with me. But yeah, I appreciate the report.
Fair enough comment. And I mean, at the end of the day, if you're pretty satisfied that our budget is adhered to and you've agreed to the outcomes and activities that the budget does represent and you come within budget, well, I think you're probably doing as good as you can do. Councillor Dunn.
Yeah, similar to Councillor Dowsing, I agree with the general heading. It reminds me of the final comment I made at the long-term plan submissions about our rate increases are getting too big and they are unaffordable, and we need to explore alternative ways of doing business. And I think that's what you're saying here, but you've called it a savings plan. And if we just said it was actually exploring alternative ways, which I believe the Chief Executive is already doing anyway with our collaborations with ECT. So the ball started rolling, and if we can encourage that move in that direction, then I think it's right. I've moved past agile now. It's called stragile.
Is it? So I've got to use a different quote from you now. Look, I'm relying on you to come up with some good ones.
See, strategic agility. But be strategic with how flexible we are.
Robert.
Yes, I think the paper provides, a good reciprocal for ideas to be expressed, because we should always be looking at continuous improvement, and we should be looking at new technologies that may not even be available yet, but I think it just means it gives somewhere where we can focus the ideas and staff suggestions for saving money and making efficiency improvements. So I think it's been very timely and good paper.
Thank you. Thank you, Robert. Councillor Thompson.
Thank you, Mr. Chairman. Some of you might remember that our former Chief Executive Officer, Mr. McKenzie, we actually implemented a efficiency review committee, and it was a special group that, like, I don't know, was just a, when I say special, they weren't special people, they were just a group of councillors. And it was a bouncing board, and we could probably just use our FT for that, but it was a bouncing board where he could come up with concepts, but they would have an effect on levels of service, and to get sort of councillor buy-in or councillor, how do you feel about this? And we would go through different items, and I think again, as Robert was just saying, I don't think you never take your eye off the fact that, you know, if you have a manager in any business who says this is the best it's going to be, at the end of it, you know, we've reached at the pinnacle, that's as good as it's going to get, time to move on, because you always got to be looking for, and I think it is a collaborative thing, you know, like more and more often boards and management work with those. In fact, I've read articles where modern thinking says that management should be using their boards more often to get good ideas, and so I'm not altogether against. I think as a savings plan, calling it a savings, you know, like an efficiency review thing might be a better wording for it. But again, it doesn't have to be. It can be something that can be done in conjunction with what we've already got going.
Okay, I think we've discussed that enough. So we've got a mover and seconder, and I'm going to move that we just receive the report. All in favour say aye. Aye. Against, carried. Okay, so move into public excluded, moved by Councillor Burdick, seconded by Councillor Akahata Brown.